Okay, I'm going to do the eurodollar first. Okay, this is a trade I did earlier in the week, and I want to justify why it was taken. Give you a little bit of details about some of the things that I've learned along the last 20 plus years as a trader. And right away, when you look at moves like this, these sudden reactions in price, leaving consolidation like this, I like to see that because it shows a willingness on the part of smart money, and that means the deep pockets. Okay, the folks that really know what's likely to happen, and they're going to be more apt to be right. This entire move here, I was anticipating this whole move up. Now, it was not long. I didn't participate in anything going long, but I did anticipate it rallying up and leaving this consolidation. I'm not going to go into great details of why I believed that, but I believed it was going to go up to a specific price level, and it didn't make it there, which is the reason why I had to sell short at a lower price below this consolidation. Now I'm going to show you on the monthly chart why I was wanting to sell at a much higher price. Well, not much higher price, but it's still high enough. It didn't get there, let's just put it that way. I was waiting for it, and I thought I'd get it, but it didn't happen. So what I'm going to do here is I'm going to give you some secret sauce. And don't go on Facebook teaching this. And don't be putting it on your charts. And no, I'm just kidding. This is a ICT bearish order block. It's the last up close candle on the monthly chart. Okay, and I want you to take a look at the levels here. 119.09 and 118.19. Okay, that's a range of 90 pips. Okay, so if we divide that in half, it's 45. You add that to the low here, that'll give us a middle point price of 118.64. Okay, so that's what I'm going to put on my chart, 118.64. And like always, it never gives me that particular price level. All right, so we have our level exactly in the middle of the bearish monthly order block. So I wanted to see price trade up to that level. Okay, so now with that in mind, I was waiting for that, and I would have saw that trade to it. Let's go into a 15-minute time frame again. Okay, you can see it just fell short. Now I was watching it, and I'm telling you, if I would have had an opportunity to do a gentleman's wager, I knew in my heart that it was probably going to hit that level. And had it hit it, I would have sold short right there. But it didn't happen. And it collapsed rather quickly. This consolidation, kind of look at it like this. See how it was consolidating here? Okay, this whole sideways price action. Well, it was starting to do that all in here as well. And price took off. So in my mind, I'm thinking this is going to be a false break. Okay, it's going to go up to go down. Okay. My tutorials go into great detail about how to see these types of things, but for now, I just want to kind of like recap it. I'm not trying to do 1,200 hours worth of tutorials inside of a 20-minute video. But price left this consolidation, rallied up, failed to get to my level. I wanted that level, didn't give it to me, so I had to adapt. That means I had to be very close to this consolidation to be given a optimal entry. I felt that because of these equal lows down here, there would be a lot of sell stop liquidity or a liquidity pool. Okay, so I knew I wanted to be a seller up around 64s, and I wanted to buy them back below here. That was the trade idea. That was the model I used. Okay, so while we were close to the bottom of the range, I just simply went in at the market, and then that's the fill I got. Okay, and you can see the exit. It was a beautiful punch down below these equal lows. Now, I didn't get the absolute low, and in fact, if you look at what happened, it went a little bit lower, and I don't care. I have no care about being absolutely perfect. I just need to have that piece of the market move a couple times a month, and I'm okay with that. The concepts that I teach provide you precision in terms of the direction and the most likely high and the most likely low. but I am not trying to promote the idea that you're going to get that. Okay. So don't do that. And the folks in the mentorship know that I teach the same way there. Even though the tools will help you get really, really close to it, do not try to operate and execute with that in mind, because you're still going to screw it up. You're going to read it wrong, or you're just going to, greed and fear and all that stuff's going to still weigh on you, and you're going to do it wrong. So that was the mechanics behind why I did that short there. I wanted to get a better price, and man, if it would have hit that, I'd been like legend this week, but it didn't happen. So nonetheless, this is where the euro is trading now. Not bad in terms of where it is on a grand scheme of things for the weekly range. Let's see what we got here for a week. So it's kind of close to the weekly high, but it is what it is. I did not participate in any. I got a lot of people asking me, did I do any of this stuff? No, I didn't do any of it. I wasn't able to participate. I was watching other things for teaching purposes this week. I gave you S&P ideas and Japanese yen, which I can't stand that pair, but I ended up nailing the high on that pair for the week as well. But no, I didn't participate at all on the eurodollar. It was a beautiful run, but it is what it is. Speaking of yen, let's knock that out real quick. I said that we would probably see it run, and let's get off this 1 minute chart. We'll go into 15. And we'll zoom in. All right, and there we are. So here's Monday's trading, and I felt it was worthwhile to take a run above these equal highs. And you probably see a recurring theme, and that's kind of like the intent I've been spending the last 2 months with you. I want to give you what the heart of my tutorials has always been trying to teach you, but you're always worrying about, like kill zone indicators and your ADR indicators, Michael. You're all worried about the tools instead of the concept. That's where the money's made, okay? It's not in these tools, okay? Because everything on here can be done manually. ADR can be done manually. The kill zones can be, and in fact, I'm going to show you how I do most of my charts in my journals. They're all doctored up. Like I show the kill zone exactly how you saw it today in the dollar CAD chart. That's how I want my charts to be journaled. It's not that simple little line thing that usually sits down here, because to me, that's useless to me. I don't care about that. I put it on my chart so you all can see it and be reminded that it's happening. The signal is happening. The setup is forming, the pattern during these specific references of time and window opportunities of a New York open or a London open or an Asian session. Okay, and then there's London close, and there's also a New York kill zone that I don't talk too much about, because you have to know what you're doing. Otherwise, they can hurt you. So the equal highs in here, I mentioned this, and if you're watching this video and it's months past when it was actually done, I don't delete my Twitter tweets anymore. I used to do it and purge it. So however many tweets there is, okay, you're going to have to scrub back to find it. But I promise you, I mentioned all these things at the time, and people can call me out as a liar right now on Twitter. If I didn't do it, it's there. You can go and see it. But I was targeting a run on these equal highs here, and I used that as a framework to set up this trade idea. And you can see I ended up getting the very high tick, very, very high tick of the yen. The high comes in exactly at 113.94, and you guys can go on Twitter and see all that stuff. I gave you screen captures and shots of all that stuff. But that's the actual high. Now, what was my low? What was I looking for this week? I was looking for 112 big figure even, and I know you're probably thinking it's horse crap. I'm trying not to cuss this time, but that's what I was looking for. And I'll promise you that if you go through the tutorials, that is taught to you. Okay, that part is taught. You're not going to get it every single week like that, but with a week like this has been for the yen, it's pretty predictable. And we're not going to go into that, but I want you to look at the framework each day here. Each day, there was a trading opportunity. Not all of them were as profitable or perfect, but there's a handful of them on here that did exceptionally well. And I'll just pull out one real quick. And yes, this is hindsight because I didn't do any trading on the pair outside of this one over here. But if you look at what I've done since I've been back on Twitter, I'm showing you pinpoint precision points where I'm getting weekly highs, weekly lows, daily highs, and daily lows. Because I get a lot of flack from people saying that it can't be done. You know, don't listen to that. Nobody can do it. And I was actually listening to Larry Williams on my drive home. I hooked it up to my car. I was listening to it through Bluetooth. And one of the videos, and I'll send you the link on Twitter after I'm done this, where he actually talks about how he doesn't feel certain things that you see me doing that is possible, and I'm doing it. So don't take my word for anything. Don't trust me. Don't believe in me. Go into the charts and see if it's real. Okay, that's all I'm asking you to do. I don't want you to have any faith in me. Don't believe me. Believe the concepts I'm sharing with you because that's the market. But if you look at this particular day here, okay, previous day's low is here. So we're just going to hurry and put the lipstick on it. I don't want to spend too much time on that video because last time I did this ended up becoming an hour and a half video and it was full of all kinds of just obscenities and I didn't want to share that one. So I'm trying to be more civilized and not such savage anymore. But the high right in here, we have a nice retracement. This is a beautiful optimal trade entry. Now, I'm not putting the Fibonacci on this because you should be able to see it without it. The high, the low, and right in here. Now, I'm going to put it on here after I've mentioned it, but I wanted you to get an opportunity to see it before I put it on. Highest body to open or close in the swing, high, down to the lowest close or open, and that's this one right here, okay? Beautiful delivery at 70.5, okay? Wonderful. Would I have shorted it at that level? No. I would have shorted it right at the 62 or just before it. And I would have allowed my position to have the risk from that point up to the high up here. And that may not fit your criteria. You may want to have a stop that's much smaller than that. And there's no problem with that. Just go into a smaller time frame and zero in on this little area here. And just wait for a smaller 1 minute fractal of the same pattern of optimal trade entry. And you'll see it unfold. But selling short here, aiming for the previous day's low, that's a wonderful opportunity right there. I mean, we can see that target 2 is in close proximity to that same particular level, and it dips down below it, and look what it does. It spends a lot of time hanging around sideways, and then ultimately it breaks down and sells off. We went down to a logical level that I'll teach you in another addition or supportive analysis video for the mastering high probability scalping video. That's going to like evolve. So I know a lot of you are like, give me snipers series and give me precision trading concepts and put the trading plan video series up. I'm giving you something right now, nuts and bolts, because I already know what you're going to do. You're going to watch videos and like you're watching Seinfeld reruns, and you're not going to get anything out of it. So I'm giving you right now something you can do every single day, and I'm showing you every single day that I can find something every single day. Now, I can do it because I know what I'm doing. I've been doing it a long time. But I don't want you thinking that you can do that. I want you to say, okay, what days of the week can I trade? And I'm going to focus on those days, and I'm going to try to find my 25 to 30 pips for the week and be content with that. I'm proving that it can be done. Now, I don't trade like this. I look for one good setup for the week, and I put what I'm reasonably comfortable with putting on risk. I put the trade on, and I let it go, and I manage it throughout the week. That's my one shot, one kill. That's not what I'm teaching, but I have taught you the bare bones framework for a really, really killer scalping system. And truth be told, if you master just this, you don't need any of my other tutorials. You don't need my mentorship. You don't need anything. This is enough. But some of you are going to be freaks and you want to learn everything I know, and that's fine. But understand that what I'm doing is I'm building on a foundation I've created in the last 2 months with you. And I don't want to waste that foundation and steer off into other rabbit trails because I could very easily confuse you and also inundate you with more information that's necessary. But just know that there's a lot of other information that will help complement what you're learning now. All right. And again, I just wanted to prove what I was teaching works because I do it every day. And you see the results of it. And you not only see me doing it, but you see my students doing it, which is very encouraging as a mentor. But beautiful delivery of price down to 112. Handsome opportunities to get short throughout the week in here. If you look at this one right in here, this is something that a friend of mine, actually, it's local, he did this trade here and argued with me why it shouldn't have been a sell-off to go down below this low and keep going down. I'll say this, okay? When you look at significant turning points, and I'm going to answer Tom Dante's response about what fibs should be done and what shouldn't be done. Every swing low and every swing high is not the same. And just because it's a parent price swing from like this low to this high doesn't necessarily mean that that's where you should put your fib on. Okay. So there are specifics in price action that I teach, not in free tutorials, that will allow you to frame your fib on the highest probable condition, high and low. And I say that, and I know some of you are not going to want to believe that because it sounds like secret sauce and it sounds like a sales pitch, but you don't need that. I've already proven you don't need that. So while I can say it for completeness sake and also to respond to what other educators say, and I'm not trying to be disrespectful to you, Tom, but there is a science to the way I put my fib on. And the fib isn't the thing I'm actually trading on. It's just helping my students see a particular range in terms of overbought or oversold without an indicator that would be oscillator based. Okay. I'm just looking at it in terms of a range, a price range. Because most of everything I'm doing is I'm trading inside of a known definable price range, an old high and old low, and I'm using that information. And I trade with that. That's pretty much all I do for scalping. And I look for some extreme to get to either hopefully get very close to the higher low of the day or higher low of the week. And that's all I try to do every single trading day. Now, look through your pairs and you'll see just because one pair had a really good opportunity one particular day of the week doesn't necessarily mean that all the other majors had that same criteria or that same pattern, because it doesn't repeat like that. There may be a lag in one or two pairs where you may not get the setup that you were looking for on, for instance, like cable, and it doesn't happen for you. All of a sudden you get it in cable a day or two later, and there's nothing wrong. Don't try to force it. Don't try to fight it. Sorry about that. It tickled my throat. All right, so we got the cable is next in our roundup, and then we're going to do dollar CAD, and that'll complete our presentation today. So this is not the teaching thing. I got one more thing for you tonight, where I mentioned earlier in the week I found a journal entry I had from 1994, and I think you'll like that. But this is the pound dollar, okay? And I gave you a short little video on Twitter, okay? I've been trying to experiment with that, where if I can avoid making these long-winded videos and give you like little snapshots throughout the day, I'm trying to master that and trying to get it down to like a 10-minute process where I can do it quickly, boom, and put it together. Because I think it'll be a lot more useful, because it's one thing to show you a static chart and then have the the beginning and the entry points and all that stuff. I already know some of you guys that don't like me, okay, don't believe me, or don't want to know what I'm doing, or maybe you do like what I'm doing and you just can't admit it, but you don't believe I take the trades. And I'm showing you videos where the actual trades are entered and why it's happening and the mechanics of what it's being done. And I did that right over here with this one. It's hard to see in here, but this particular trade right here, that's what I sent a video on Twitter, and it was my response to Tom Dante about there's no necessity for fibs, because I was targeting the stops below here. And if you look, I had the actual idea of where I wanted to get out at up here, and it ended up happening on a little bit later in the day here with this move here. So the long and short, if you have a opportunity to anticipate movement, if you're looking for price to get to I guess I'll just stick with the theme I've been teaching since I got back on here. It's the draw. Okay, where is price going to be pulled? Where is it going to be drawn to? Is there an opportunity to see a directional bias based on what you believe with what I teach in terms of the tools? Is it going to draw price to a high or a low or into a particular range? Now, In here, I felt that it was going to go up to that level. I felt it was going to go above these old highs here and reach into the area you see trading it here. Now, once it did that, it pulled down and started consolidating a little bit. And then I watched these equal highs, these sitting here. I felt that we were going to move above that. Now, again, same scenario as I did with the eurodollar. I wanted to sell it up here. It didn't give me the price. As much as I wanted it to go up there, and I was seething. I wanted it to trade there because I wanted to hit it right as it hit that price. It didn't do it. So all I had to do was consider the fact that we made another run above this short-term high. Now this short-term high and these equal highs here, that in itself is a trade. You could have taken that trade here, and truth be told, if you would have done it, you probably would have been stopped out. The only reason why that didn't happen for me, and it would have happened for me, and I would have suffered a loss, I would have been stopped out. The reason why I didn't take the trade is because I wanted this price level. Why? Because it's 20 pips above. That's what this little blue shaded area is. This is 20 pips of a price range. This is 10 pips. So anytime you look at your charts and you see double tops and double bottoms, okay, don't feel trade empowered to do that. You're not empowered by trading off of that and finding resistance and taking that as a short. That's not what you should be doing. Your mind should shift gears and say, okay, I know everybody on the internet and on YouTube and everybody else on Facebook are going to have the idea that this is a double top, therefore a protective buy stop is safe to put above that for a short position. Well, what does that mean? It's going to be targeted. The market will go into a attack mode, let's put it that way. I'm being very careful about what I say because I'm so relaxed the last almost 14 months now, being able to say what I normally would say in my mentorship, but I got to be careful what I say. So the buy stops that were ran above these equal highs, that was efficiently done here with 10 pips. But once price started running again, I wanted to see it punch all the way up into 20 pips. Now, I could have went like 22 or 25 pips, something like that. I don't care. I would have went in at 20, and that would have been it. And I was anticipating this breakdown in price. Same scenario like on the eurodollar. My eye went right to where it's cleanly leveled off at lows. That's down here. Okay? Small little pocket of price action that's sideways. Everybody's going to see that and say, okay, well, that looks like it's a safe spot to put my sell stop on my long positions. And price doesn't take long to go down there, does it? Goes right to it, clears it out. I sent you a chart on Twitter, okay, and I gave you the next area of liquidity, which is here. And then I gave you another one back here. Yeah, there it is. So once I shared this opportunity that came to fruition, I was trying to get you to think beyond this one when I had someone tell me they didn't tell me, they were suggesting on Twitter, and anyone enticed to buy it down here. And I didn't want them to fall victim to that, so I just threw out the chart where this had the next sell stop. So I wanted folks to at least consider that. Just be considerate of it because that might have been painful if you would have just simply tried to buy it. So we ended up coming back down here. If you let me borrow this line here. There's the old low. And there you go. They swept those same sell stops below here. And then look at the reaction. That was in my charts on Twitter. I can't go back and, fold the fabric of time and space. Okay, I can't do those things that, time travel. I'm still working on it, but I just can't do it yet. It looks like sometimes, but those charts and those points of reference are on Twitter already. And I don't have any manipulation of what Twitter has on there. I can't change what's shared on MT4. When I create a chart from MT4, it's completely driven from their server and its time and date stamped from the time I did it. So that's why I do it that way, because I don't want this is better. In my opinion, this is way better than TradingView, because it allows you, number one, you can keep my charts. You can keep my charts and study them, make your own notations. There's plenty of open space on there because I don't have any kind of indicators or anything like that on my chart. You can print them out and actually, write your own notes on it. That's what I'm trying to encourage you to do. I just put on here what's salient for me. What was the reasons why I took the trade so that way I can share it with you. Okay, so look at the reaction here in price. It went right back to the area I did my second entry in the midpoint of the overall range, essentially. But I'm not going to go into details of why I sold short here. Mentorship will know why, but it's not necessary. Up here, it was the optimal trade entry. Okay, another failure swing. And then ultimately, this one, had I not been able, well, had I been able to stay home and be through the New York session, I would have left a portion on and opened these limit orders up a little bit to get down here, but I couldn't watch it. So believe me, I was antsy because I couldn't wait to come back and see it, because I knew the likelihood it was going to drop off, and I was hoping that we would get all the way down here. And that's probably a little bit too enthusiastic and ambitious on my part, but I certainly wanted to see it trade down here. But this is the next one that was going to be taken, and that was about the end of it. But I would not expect it to do too much from where we are now. It'll probably consolidate right in going into the close. And the last bit of business, we'll look at dollar CAD. I shared my chart by way of my son, and I didn't have my previous order I got in, but another attempt to get long on dollar CAD, and I got stopped out on this one, so you guys can get a chance to see that. And look like I'm giving you all the sugar, but I got some vinegar today. Let's see, put the fib on, and I'm looking at the lowest close or open. That's what I'm putting it on right here. I'm dragging it all the way up to the highest open or close right there. Okay, so I have two reference points here and here. As price dropped down into optimal trade entry, this whole business in here, this whole rally up, I was not a part of it. I had no participation in it. I didn't have any kind of prognostication. I didn't see it coming. I didn't care about it. I didn't worry about it. That's not what I was concerned about. What I wanted to see was a retracement back down into here, because if you look what this is, what is that? What's this in price action right in here? Double high, right? Or double top. So our eye should be trained over a period of time seeing examples like this. If we see this, if it looks too clean, too perfect, too precise, if that happens in price action, I like to see that, and I draw little rectangles up around that area, and it keeps that reference point in focus throughout the entire week. Because if I see it and I get drawn into a discussion, or if I'm distracted by someone's questions or whatever, because I'm talking to a lot of people every single day, either by email or by my mentorship or text, or some of them actually call me, and I'm constantly being pulled away. And if I don't keep proper notes on my chart, then I'll lose sight of them. So in this example, what I'm referring to is if I see a double top like that, all I do is simply that. That's it. Real quick. It's simple. I don't need to write any kind of notations in it. None of that business. Okay. I just know that that is going to be a liquidity pool, and it's got buy stops above it. Now, as the price action was dropping down lower, lower, and lower, once we get an optimal trade entry, I was thinking, well, it might pop up there and clear that up. I was wrong. It rallied, gave me an opportunity to have paper profits, but then I was not paying attention to it here, and it gave you another, and gave me, but equal highs, just like it did here. All through here, completely unaware of it, wasn't watching it, came down, took me out. Once the response below here got back above below this low here, once it started rallying again, all I have to do is consider again that same equal high phenomenon when buy stops are taken. But now we have a transition. We have buy stops being taken, and this is now a market structure shift. And still, this is still in play. It's sitting in your chart. It doesn't leave. It's right there reminding me that, hey, look, there's money up here. There are orders. Isn't it reasonable to assume that someone went short here? I mean, I would think somebody has to be short there. May not be a lot of people, may not be someone you know, but someone's reasonably short. If price is down here, someone could have very easily held for that entire move and could be holding for longer moves. So if that's the case, and we see a break in market structure and it's late in the week, well, what's most likely going to happen? In my mind, they're going to take the position from them. So classic to what I taught you in the scalping after 7 o'clock. I'm sorry, this is midnight. 7 o'clock in the morning in New York time is going to be here. And I want to kind of outline this so that way you guys can do the kill zones as I do it in my journal. Now, this is 7 o'clock in the morning New York time, right in here. Now, I'm going to take the fib off. Take a picture mentally with what you see here, get a view from it. And then also, I already have pictures of it on Twitter, so you guys can use that. But I have this right here. Try to remove all this other stuff so you guys can see it clearly. So this is the 7 o'clock in the morning time for New York. So local time for me on the East Coast of the United States. I'm in the state of Maryland, so I'm East Coast time. So whatever the time is in New York, it's my local time. So for this this platform here, it's going to show 1200 is my 7 a.m. in New York time. So that's what it looks like for me. What it means for you on your broker and where you are globally, I don't even know, and I don't even want to have the discussion because it's very confusing for me. And I have no shame in telling you, I've messed so many people up in the past doing that, trying to help them, and I made it worse. So just know what it is in New York time. Figure it out on your platform, whatever 7 o'clock in the morning is in New York for your time locally and for your platform, and then you'll be calibrated. It's just that simple. Okay, so I can't help everybody because they're all in different parts of the world. Now, what I have noted down here is this is a little notation I've made. This is not an indicator. In my opinion, this is so much better than the MT4 little time thing, okay, that shows the kill zone. The fact that that little line down here highlights the window of beginning and ending of the kill zone doesn't mean anything to me. I don't look at it like that. What I'm looking at is in my personal journal, my charts look like this. Okay. What I'll do is at the time of daylight savings time, for about 2 weeks or so, I actually overlap when 7 o'clock comes and when 12 o'clock comes and when 2 o'clock in the morning comes, where the London Open kill zone is. So basically what I'm saying is when daylight savings time is in effect and when it's not in effect, I still use those reference points the same. I overlap them. See, this used to be 7 o'clock until we had the time shift for daylight savings time. And then we did daylight savings and it shifts it on this platform to here. Okay, so I keep it the same. And this is what I meant on baby pips. Like, I don't mess with daylight savings time because in this case, you can see that the setup doesn't really give it to you. If you use standardized daylight savings time as it is right now in New York time, you actually are entering before the actual kill zone. But because I do an overlapping, I compensate for that. So I've beaten the market makers many times using this application here with time and price. So that's why it's important to have notations on your chart, and that's why it's justifying here. And that's why sometimes when you look at my chart, you'll see there's a particular highlight of a time window, and it may not be jiving for what you have on your chart. And it's because you're not incorporating the compensation I've made for daylight savings time or the lack thereof. Okay. So now what I do is I just simply draw out a small little box, draw a little segment of price action, not price action, but segment of a trend line, and I encapsulate the window of time that I think the signal is going to form. And I'd make a notation on my chart as to what I'm looking at. This is daylight savings time, so it's adjusted for that. Now, say I want to do this same thing. Say tomorrow was say it was Thursday today, and we want to be doing the same thing tomorrow. All you have to do is go in here, go into the properties and parameters, and change the 17 to an 18. And click OK. Boom. And it takes you and it puts it right over here again. That's a better kill zone. Yes, it takes a couple steps. Oh, well, I don't want to do that, Michael. I want to have that really cool, smart-looking indicator because it makes me look like I'm smart. And it's just a lazy man's approach. I wish I never would have used it or shown it because I get bothered for that indicator more than any other one, even more than ADR, because they think this is somehow lighting up something on my chart, and it's not. It's just highlighting the dependency I have on time and price agreeing with one another, and that's it. So, what led me to believe that we were going to go up to as high as 128.26? I can't tell you. I have to kill you, but I'm just kidding. If you look at the lows, I mean, sorry, the highs over here, okay? If we take that price range and we take the low up to the high, I'm going to take our fib, anchored there, and just draw it up. Draw it right up to the highest close, okay? What's the level above this? What's the next fib level? It goes to target 1, okay? So target 1, we're going to drop a line on that right there. And we'll walk that out in time. Right here is a nice, reasonable price level to get out at. Now, if you were buying long in the New York Open and got out there, would you be satisfied with that? Sure, anybody would. There's no reason for you not to feel satisfied about that. But because that particular level is what it is, it's 128.07, what is it suggesting? If we go above, now this is where tape reading comes in, okay? This is the part that makes my stuff look way better than if anybody else uses a Fibonacci or kill zones or order blocks, because they all try to do it. But there's things that you got to use that come by way of studying price action. These equal highs are where? Below the 128 big figure. So if we're thinking that it's going to go above these levels in here, what's it ultimately probably going to reach for? The 128 big figure. So if that's the case, we go back down and calibrate our horizontal line to 128. So we're reminding ourselves that there's liquidity above here. Order flow, as I teach it, and this is one of the barest bones little pieces of nugget information you're going to get from me. I'm going to amplify any more on this, but this will make you very consistent. And I've already told you already. If we are reaching up to a big figure, in this case, the big figure is 128. If that's likely to happen, your mind should jump immediately to, okay, it's probably going to go 10 to 20 pips above the big figure. Now, if you just simply take 10 to 20 pips above these highs alone, this is 10 right there, and 20 is here. There's nothing wrong with that. That gets us really close to the a reasonable, well, really nice. I mean, the bodies of the candles you can see stop right at the base, well, not the base, but the top of that 20 pip range above these equal highs. Nothing wrong with that either. If that's what you would have used to get out, no problem. I'm just a freak. I want to have insane accuracy where no one can touch me. I want to be in a different level. I want to be another platform of accuracy and consistency that no one can come close to me. And that's always been my driving passion in this. If you want that, then you have to incorporate this same 20 pip range to that 128 big figure right there. Now, once you do that, you take our horizontal line, drop it on if you can get it to work for you, and drag it where it's supposed to go right there. That's pretty damn close. That's another level, 128.20, institutional price level, and it's done. Now, you can see during this entry in the, what is that, New York Open yesterday, I was wanting to get above this level here already. I never would have gotten it, but it would have been real close to it. I would have been short by a pip. So I would have been really pissed off if I would have missed all this down move. But I captured the big portion of the move, and I felt no conviction to hold for anything higher. It only went a little bit more than I thought it would. I screen capture by way of a text. I said to my son, I said, look, I need you to go in there and just do a screen capture, push it to the Twitter. Don't comment on anything. Just send the chart to him. I want him to see it as it's happening. Well, long and short is, you can see what's happened since then. On my drive home, I was watching it on my phone, and I was like, man, I knew where it's going. It's going to go back down into the 2750s. Now, we've yet to get down there, but I think ultimately that's probably what it'll try to do. This is a TGIF trade, just like the cable trade is. And TGIF will actually I'll teach that to my mentorship next week. So on the actually, it won't be next week, it'll be this weekend's preview. So yeah, you guys that are watching that are in the mentorship, I'll teach you the TGIF trade in our pre-market analysis. That way you have it. But the folks that are joining me next year, you'll have access to that stuff too. But nonetheless, you don't need that. It's just another way of interpreting price action on a specific trading day, Fridays. You don't need it. There's plenty of other opportunities in here. Wonderful optimal trade entry for the New York session here. Breaking market structure as it was taught to you in the scalping. It's reaching for previous day's highs, 10 to 20 pips above an old high. Your eye should go to an equal high, equal low. So that way you know where the draw is. Okay. So the question I got the other day was, how did you know that price was going to go up to this area? Well, that's going to come by experience. Not every answer is going to be so clear cut. And I'm going to be honest. Some of the questions that are asked of me in the mentorship are just like that too. And I respond the same way. It's going to come with experience. Now, there's a lot of rule-based binary thinking. It's this, then it's that. It's this or it's that, or it's this or there's nothing to do. But there's some things that just simply can't be communicated without the scope of experience. And that's going to have to come by your time in this. And I can't shorten that for you. I can't make it easier or less painful. Some of you are going to be more stubborn than the others, and the ones that aren't as stubborn will do better. They'll learn faster, not be a better trader. Maybe they could be, maybe I don't know. But the point is, some of you want the impossible to happen for you, and I can't make that happen. As much as I would love to be able to do it, and believe me, I think my character and my personality shows you, if there was a way for me to do it, okay, and remove the necessity for experience and some of the things that you'll have to learn by that very thing, experience, I would be doing it. And since I can't and I don't know how to do it, it's what it is. And we can't escape that. It's the truth. It's truth, and it's just anything. You can't escape it. Experience is necessary. So I think that is going to do it for today. I don't want to spend too much time to make this a long-winded video, but a couple of you asked about the video I did the other day when I did a live session, and I got real loose with my tongue, and I said a lot of things I didn't want to do, and that was one of the things I said I wasn't going to put in my YouTube videos anymore. So I was a little Deadpool yeah, last time I did that. So hopefully this has been insightful to you. You've not been bored or confused. Hopefully brought some clarity to what price has done this week. And I saw other trades I've taken this week, but you've seen them on Twitter, and they're pretty much straightforward. But these are the highlights. These are the real nice ones that took place. But I tried to get the dollar CAD a little early, and I got stung on that one. But ultimately, like last time, when I took a loss, you just expect the same thing to happen going forward. The set's set up the same way. You use the idea where the market's most likely going to go, and I taught you the very easiest way to find opportunities for that. How do you know where the market's going to go? Where's the bias? Where's this? Where's that? It starts by understanding that daily chart, looking at an hourly chart, looking at old highs and old lows where they could potentially reverse, and looking for equal highs and equal lows. Those price points are gold mines. They are absolute gold mines. You cannot find anything easier than that. Double tops and double bottoms will get rated. Now, they can sit in the marketplace for a long period of time, especially if you're wrong about your bias. For instance, if you look at the 15th, that was 2 days ago. People probably forgot about that double top, but I don't, because I make notations on my chart. Now, I have a completely isolated trading station where I have my CPU, and I don't even surf the internet with that. I don't sign on to anything except for my data provider. I'm pulling from eSignal, and I don't do anything but use it for my analysis and trading, and that's it. MT4, it's on my phone, it's on my iPads, and it's on my laptops. Okay, I have a couple laptops because when I was doing mentorship, my son was helping me, and sometimes he would post charts for me, and they would not be the same demo account, but they weren't showing you any trades anyway. So I don't have a way for you to see my real setups, like my charts and stuff like that, because it's not through MT4. I don't trade through MT4. I don't use this demo account or this demo provider. Like Forex Ltd is the actual what do you call it? The broker for this. This data feed comes from them. The only reason why I've ever used Forex Ltd is because they offer the dollar index. Now, if I was willing to go through a pursuit of knowing another broker that provides the dollar index and maybe does the bonds and maybe does commodities, then that would be even better. I would look for that one. But it just so happens that this one was the first one I found, and I stuck with it for years. I just think this is a good one to use. They have a problem sometimes with their data. They're pretty lazy with gaps in their price, and I switched from them and used a demo account. I can't remember the name of the company, but my mentorship group knows. If you know which one it was, you want to tweet it to everybody. That's also one that did have. I think it did have the dollar index on it, but the long and short of it is that you want to have a reference point. And I'm not doing the dollar index today because my charts have all mentorship notations on them, and I know if I start talking about dollar, my tongue's going to slip, and I'm going to talk about things I'm not supposed to talk about. So you just have to take me for my word and just know that this is enough. You don't need to see the dollar. Everything that you're seeing in here is going to be the opposite for the dollar index. Okay, well, not so much on the dollar CAD, but for eurodollar and British pound USD. Okay, and I think that's going to do it. So hopefully you've had fun this week. I had a lot of fun. It's really fun for me to be able to share this stuff with you guys, point you in the right direction, and get you thinking about certain things. A lot of you are really doing well. I'm encouraged as a mentor to see that happening. You're taking exits without me spoon feeding, and that's been the whole point. Okay, 2010, I stepped out and I said, okay, I'm going to have a social experiment, and none of you knew that you were guinea pigs. You just were just happy campers, just eating up every video I made, loving the music, loving the content. Maybe not so much me, but still, it was entertaining enough for you to be engaging with me every single trading day. I was giving a video every single day. It was meant to see who would learn this like I did, and no one did. I could have done it just like this from the beginning. I could have very easily sat down and said, okay, here's a couple videos, focus on this and practice. Okay. But that's not what I wanted to say. I needed to be entertained by it. That was the whole point. I was entertained by people on the forums that talk about things that aren't what makes price move. And before I close today, I want to kind of like interject and say I saw the last tweet by one of the followers I have on Twitter, and he asked the question of what makes the Fibonacci so powerful. And get your paper, pad, and get ready to write this down. Okay, it's one singular word that makes that response. Nothing. It's Nothing. Nothing makes the Fibonacci powerful because price doesn't care about Fibonacci. Fibonacci is not the power that makes this stuff happen. It's understanding order flow, and it's not with DOMs and depth of market and footprint and ladders and all these other things that are out there right now because they're limited in their scope, especially if you're going to be trading Forex. You're not seeing every order that's at those price levels, okay? And when we see that kind of stuff, it's no different than when we look at Oanda. They have an order book thing, okay? And you don't know if those orders, they may not even be there, okay? Just like the footprint and the DOMs and depth of market and all those things. They could be flashing things that aren't really there anymore. So what? That's not the same as understanding sentiment and tape reading. That's essential. That's what makes me good at this. It's not Fibonacci. It's not order blocks. Order blocks is a way for me to communicate it to you. I'm seeing something entirely different. Like I know above these highs here, there's stops, but it's not just above these highs or at these highs. It's in grades of 10, 20, and sometimes in 30 pips. But you're not going to know that from looking at books and studying things and talking to people on forums because they're so, well, indoctrinated with indicators and old school theory that's always been there to promote misinformation. And it probably doesn't, you probably don't want to agree with that. You probably, because you're using stochastics and moving averages, you're making money, you're going to disagree with me. And you're going to say you talk to a guy on the forum or the Twitter and they say that they know a market maker or they know somebody that does this and does that or works at a bank and makes mortgages. He says that there's nothing like I'm saying in the banking industry. And none of those people even know what I'm talking about because they wouldn't. It's all the way up to the central bank level. That's where price comes from. Brokers can't manipulate price except for just a small little sample size of a spread. Okay. That's the extent of the manipulation they can have. Central bank sets the price. It's the high and the low, and they do that. It's already predetermined. How fast it gets to those parameters, high or low of the day, is all based on what's going to happen that particular day and how much liquidity is in the market at the time. No one's going to know that. Depth of market's not going to tell you that. Okay. No other theory is going to happen to tell you that. Order blocks aren't going to tell you that. Okay. Breakers aren't going to tell you that. Speed is an undeterminable thing because that magnitude and that velocity is the unknown. I don't know if my trade is going to have rocket fuel in it. I know when it probably can have that condition in it, but I'm more concerned about knowing where is it ultimately trying to reach for, because even if it doesn't go up there today or go down there today and everything remains true, like this dollar CAD trade, I tried to get it yesterday and I was being real quiet about it because I have a student of mine that has been killing it going short, and I did not want to upset what he was doing. I took the trade. It stung me, but it didn't sting me today. I got the honey. So I want you to understand that if you look at the Twitter feed, look at the folks that are following me and responding to me. They're sharing charts, they're sharing entries, okay? And I'll be honest with you, and I want this to be understood with sincerity. I know some of you really like me, okay? And I thank you for your respect. But some of you are actually faking your charts, and you're trying to show that you got in certain areas. When you have orders actually in the market, you won't see that price line up over here. It won't highlight. You're using the actual horizontal line like this. So when you're showing, like, supposedly you're getting long or short or your stop loss, they never highlight the price over there. So if you want to, you don't need to do that. Basically, is what I'm saying. Yeah, I don't need that type of stroking. Okay, I know, just like I can see that it's not real, my audience is seeing that same stuff, and they're probably being very kind to you by not mentioning it to you, but they're not really in the order. You're not really making those trades. Okay, so you might see how it's happening in price, and in hindsight, being excited, and you want to throw me that like I'm gonna high five you. That's why I don't like those charts when they're shared with me, because I know they're not really there. The ones that have their charts and you can clearly see that they're really in those trades, they're really in those trades. And I'm encouraged as a teacher, teaching through a demo account, that you're practicing these same things. And those signals that you entered on the framework that I taught in the recent series I gave you guys, you found those trades all by yourself. Now, the ones that have done that, some of you took the dollar CAD trade. I didn't tell you I took it. I didn't tell you I was trying to do it yesterday. And I got hurt yesterday. It stung me. It's a demo loss, but still, I don't like it. I hate it. It pisses me off that I was wrong. But nonetheless, I'm not spoon feeding you setups. And yet some of you are absolutely doing what I've asked you to do. Do the work, step out there. So when we have the Fibonacci on there, we're not using the fib for an entry. We're using fibs to draw our attention to specific levels. Just like when we have equal highs, and I told you to use that little rectangle idea to draw a little notation, keep your focus there, Okay, that's what you should have on your charts. Those types of little markers, not indicators and moving averages and all those types of things. You don't want to have that on your chart at all because it's going to distract you from price. And I have folks asking me, why is the fib really light in terms of the color? Because that's the least thing in interest to me. The confluence of these levels, that's what I'm looking for. I want to have an overlap of several things suggesting that an entry is possible, that it has the likelihood of being profitable, and also the same thing with my exits, especially with my exits, because that's my weak spot. I don't have um, a satisfaction in my exits. And I know it probably sounds stupid because you see what I'm doing, but I'm not satisfied with that. Like, I need to have something that's consistently delivering where it doesn't morph. And it takes a lot of tape reading insight that I've gained over 2 decades to get that. And I have not yet found a way where I can say, this is an exit strategy that works uniformly. Where, like, you can see my optimal trade entry pattern. It's pretty straightforward. It's a market structure break. It's a specific time kill zone, and then it trades down to a 62% retracement level. That's my approach. That's it. That's not anything that you can change around, make it mysterious. If we looked at the cable right now, if we looked at this particular pair, your eye should go right to all of the even highs and the even lows. Okay, that's what you should do. That's your first, I guess, crash course on looking at order flow, because the market will very repetitively, very consistently go right to those reference points in price action. Equal highs above here, you want to be getting out there. Okay. Let's see. I know it's hard to see. Let me zoom in. Right here, this exit point, I'm getting out ahead of this high because I don't know if it's going to break. When I'm in this trade and it's reaching for equal highs, I want to get out of that at or just below it. And that was my first portion of that exit. Now, I did this on a short little video, but it's not based on fib. It was based on orders that were resting below these equal lows. And you saw that in that little 45-second video. Price dips down. As it was going down, I was buying it, which doesn't make sense to a retail trader because they want to see it going up to be buying. I'm buying it as the sell stops are activated because those sell stops are going to be market orders to sell at the market, and I want to pair my entry of buying with willing sellers. Just as well as that is very generic, I need to have my exit strategies like that, and I have yet in 25 years not been able to do so. And that is what I'm working on. That's my masterpiece. If I can finish before I leave this earth the exit strategy that I'm satisfied with, then my life's complete. Because I have struggled, man. I have struggled with this my entire trading career. I have not been satisfied with it because it depends too much on my experience reading the tape. Reading the tape is a way of reading price, because before we had electronic trading and such, we had to follow it on quotes. Okay, and I had a quote trek machine, which is like a big old handheld device, looked like a transistor radio, but kind of thin. Couldn't trade from it. It was just a quote machine where it just gave me quotes all day long. And I could read the tape and I could read the daily range based on what the quote high was, what the quote low was, and I would make notations what the highest high was each hour and what the lowest low was each hour. Now, when I was being bullish on S&P 500 or the treasury markets, which is my two predominant markets I was trading back then as a commodity trader, I would know based on where it has traded and where I had predetermined highs and lows on the day. And they were just floor trader numbers. Okay. And while they worked phenomenal, and they still work phenomenal in futures markets, there are far more reliable things in Forex that transcend everything else that's out there in terms of accuracy. And the folks in my mentorship know exactly what I mean when it relates to the dollar CAD. The dollar CAD, that level that high formed at, I was off by 1 pip. So yeah, and look where it's trading at now. Now I don't exit there. I didn't exit at the high. I want to get out at that price point as it's moving towards it. But I want to be doing that type of thing all the time in my exit strategy. My hope is, this is my real inspiration here. If I can get a large number of you knowing how I trade, I'm confident that someone like me that takes my shortcoming, because my mentor, Larry Williams, he said his weakness was on big bullish days, he couldn't understand how buyers buy below the opening price when it's an up close day. And he couldn't figure it out. When I learned from his training video concepts and books and such, he had made a remark. And some of you that's been with me for a long time, you already know what I'm going to say, but you're going to have to hear it again. Sorry. His strategies, if you study his stuff, he's never buying down here. He's never a buyer down here. He wants to see it rally to a certain point, and then he'll buy. And I tried that stuff, and it doesn't work well for me. Never worked for me. It would always come back and hit my stop and knock me out. And then maybe sometimes it did rally later on, and I was not in the move. So he was very honest in his statement that his actual words were, I wish I knew, him saying it in his words, he wished he knew just the zip codes of the traders that were able to buy down here. Maybe that would help him, because he couldn't figure out how to do that. And that bothered me, because I looked at this guy like the Babe Ruth of baseball. He's like the Muhammad Ali of boxing. This is the man. I mean, if this guy's saying he can't do it, what the hell's wrong with this picture? Something wrong. So because I'm obsessively compulsive, and because I have a superiority complex, like I have to be the man, okay? And I'm being honest with you. So I took that as a personal challenge. If I'm going to carve out my niche in this industry, I'm going to figure out that conundrum. I'm going to figure it out, because the man that's done what no one else has been able to do admitted publicly that he can't do that. So I made my life's passion figuring out what makes this part of the daily range create the low of the day. And because I only want to be a buyer there at that opening price or below it. Now, you can't do that when you're doing the New York setup, because it's already going to be inside the range up here. But I had spent half of my career just dialing in on this. So for the last that's not closer to 10 years now. 10 years I have been consistently destroying the markets that I trade in this area. And I'm doing it consistently over and over and over and over. And it's repeatable and it's teachable, because my students are now doing it too. So I have never had the privilege, and I want to try to do this one day, but I still don't know how to frame the conversation, because I'm going to come across as an arrogant jerk. But I want to be able to sit with him and say, hey, look, this is what I've done. As a result of you not being able to teach it to me, you still were the inspiration behind it. So why I say this to you is not because I'm better than Larry Williams. I'm not claiming that, okay? What I'm saying to you is, by me teaching as the role of Larry Williams was to me, I'm like your Larry Williams. I'm sharing with you an inability for me as a trader to come up with a strategy that is consistently uniform, where it doesn't deviate. It's the same way of doing it all the time, where it's cookie cutter. Like my entry strategies are cookie cutter. It's real easy. It's the same stuff. I have struggled with framing my exit strategy where it's the same way. I don't have the capacity to do it, and it's been frustrating for me. So I'm hoping that I can get a large number of you trained to see the things that I know and able to execute on. If you're able to do that same thing, I'm hoping, and I believe this wholeheartedly, I believe it, that there's one, if not more of you, that are going to use your intelligence and your passion for this, and you're going to find a way of using what I do to create a uniform exit strategy that will satisfy me. not because, you know, I need it. I don't need it. What I'm doing is enough, but because I have OCD, which is a obsessive compulsive disorder, um, I wrestle with this all the time. I'm never satisfied with it. And it's a weakness. It's absolutely a weakness. But I tell you this in my tutorials not to demand it, but I suffer with it because I've always had this. I've always had this problem. And it stems from not having parents that really gave too much concern for me. I was raised by my grandparents. So I've always struggled for this sense of accomplishment, um, adoration. I've always wanted that. I needed that. So this industry, it has supplied that for me. And I get that. That's the reason why I do all these videos. That's why I do all the teachings, because it supplies what I have a hole in my life that doesn't fill. Now, I believe in God. He does fulfill a lot of those things, but there's still that little itch that can't be satisfied because my parents weren't parents to me. And I know who they are, but they just never weren't what I would have hoped them to be. So I have to do things to feel, I guess, satisfied. And I can't beat this one. I just can't. I can't lick it. So my whole inspiration behind all this stuff is I know how it worked for me. Now, Larry Williams probably never knows who I am in regards to figuring out that little mystery of how to buy below the opening price. And I'm sure there's a whole lot more people out there that do it that just don't care, talk about it. They just stay home and do it. But I want to be able to say this is what I did, and because no one taught it to me, I figured it out by studying and studying and studying and studying, and figuring out certain things that take place in the marketplace for manipulation purposes. But you can know all the manipulation points that usually take place, but it ain't going to end up knowing where the high and low is going to be at. You have to know other things, and it comes by looking at charts for a long time and seeing things over and over and over again. But I will say this as it relates to the eurodollar, and I hate the fact that I'm bouncing all over the place right now because the disruption I had earlier took me off my train of thought. I had a groove going. I mentioned this in the previous live session I did, and it based on Wyckoff. The folks that don't really care too much about me, they like to have their little jabs at me or whatever. They say that what I teach are regurgitations and repackaging of other things. And they don't listen when I've been very candid about the folks that had a part in my development over the last 25 years. Largely, it's Larry Williams, George Angel for S&P 500 trading. Ken Roberts was the guy that got me in the business of trading, and he first person I learned from, and I learned perfectly as you would expect how to lose money, and I lost a good chunk of my first trade. My account was smashed on an option, and you all mostly know that story too. But my mentors have been Larry Williams, George Angel, Linda Rashkin, Larry Connors with the Street Smarts book, John Murphy with his intermarket analysis book and his technical analysis of the financial markets. Those two books should be in everyone's library. So there's 3 books right there right away you should know and have. How I Made $1 Million Trading Commodities Last Year by Larry Williams. That book should be in your library. To me, I think that's the only one you'd ever need because it gives you a lot of the core concepts that I started with as a commodity trader, and it does segue into trading currencies because there's foreign currency futures markets, and you can trade those rather consistently to the same stuff I'm teaching. Then Chris Laurie helped me with the Asian range. I understood how to trade the midnight opening price, and I used it the same way that I applied the Asian range. So when I seen not Larry, but Chris Laurie's work from Forex Mentor, I bought everything from Forex Mentor years ago just to see what everyone else was doing. And I had already figured out what I wanted to do, but Chris Laurie was the only one over there that knew what he was talking about. And I'm not trying to be disrespectful, but it's just the truth. But he mentioned in some of his Pro Traders Club stuff, which I think is good. If you're going to look for another service or another medium in terms of learning, you're going to have to pay for it now. But I think that, and I don't get anything for it. You can ask Chris. There's nothing. I'm not getting kickbacks or whatever. But his material is price based in nature. You're going to have to dig around a lot in his stuff, but it's still useful if you're going to be really studying it hard. But he talked about this Asian range, and I felt that it was it's an interesting concept. I didn't know about it before meeting him. Not that I met him personally, but before meeting his content. But I studied it, and I started approaching it with the same ideas I used for the opening price at midnight in New York, because that theory is how if you saw any of my work, I did exploring the Asian range. That was a specific tutorial. All I was doing was teaching the opening range concept that I use at midnight opening price, New York time. And what I did was, as an S&P trader, I'd look for a move above the opening price when I was bearish, and I'd sell it. It's the Judas swing. Boom, it's done. That's it. When I was bullish, I waited for it to drop down, and I would buy it. And that's it. I would trade Globex like that overnight. Very, really consistent. And I did the same thing with the S&P 500 futures market at 9:30 in the morning, New York time. If you find the opening price, if you're bullish, you wait for it to drop down below the opening price, buy it, and wait for it to give you a nice little rally. And all I was trying to do is make 2 handles. If I can get 3 handles in a day, I was killing it back then. Now, look at what we got in terms of a daily range now. It's ridiculous. They're all over the place. Sometimes there's 30 handles in a day, and that's considered a low volatility day now. So that's Chris Laurie. He's a mentor. But then back in America Online days, there was a gentleman that was monitoring Wyckoff in price action. And truth be told, that was when I was a troll, because I was suffering from the illusions of grandeur, because I had the unfortunate problem of making a lot of money on stupidity. I was getting very, very lucky back then, and I thought I knew everything, and I didn't know really anything at all except for buying in a bull market. And the bull market was a no-brainer. They were like commercial bull markets. They were just going straight up, and there was no skill involved. I mean, you could have bought any commodity back then, and it was making you money. So I say that to remind everyone that when I first cut my teeth in this business, I was a loser right from the beginning. Then I got in contact with Larry Williams because of a mailing. I bought his stuff, and then when I started using his information, then it was profitable to a degree that kept me inspired to learn more and more and more and more and more. Once I got deeper into his stuff and realized he does a lot of things mechanical and stuff, I knew before he admitted it that he isn't a good trader. He's a good system follower and an awesome money manager. I mean, he can use money management, with a really poor delivering system and be profitable. That's the real holy grail, understanding how to manage your money. If you can find a system that gives you a positive reaction, it's measurable, it repeats. It doesn't have to repeat a whole lot. If you have the right sound money management approach, you can do exceedingly well. And Ralph Vince and Ryan Jones, if you want to look at that kind of stuff, they're kind of pricey and really dry in their content. But for money management ideas and theory, that's the spot. You want to look at that, because that to me is like the science behind money management. Again, it's not easy reads, but that's the real bones of it all. But this guy was on the forums on America Online, and he was discussing Wyckoff. And if you've never looked at Wyckoff, do it, because I get a lot of flack from people that, it's the markup phase and the markdown phase of Wyckoff. That's the Michael's market maker buy model and sell model. It's just Wyckoff, and just ignore Michael. Go through Wyckoff, okay? Go through that, study it, and then come back and look at what I teach when it comes to market maker buy and sell models, because I make it precision. I understand before it actually creates the markup. I know when it's going to happen. See, you have to wait for this thing called a spring to happen in Wyckoff. I already know the spring's going to happen before it happens, sometimes days before it happens, to the price level before it happens. Like I'm sick with this stuff. It's insane how predictable it is when you throw away everything else. But I will say this, I was a troll on America Online to this guy because I was losing my money trading what I was using in my own trading. And this was in 1999, getting ready to transition into 2000. I was getting really, really heavy with my positions and over leveraging, and sometimes not even using a stop loss, admittedly. And I felt that I knew more than I really did. And this guy got online and he was teaching Wyckoff. And because of the terms, if you read Wyckoff, you'll know what I mean by it. It's like uh, crack the ice, jump the creek, spring. These are all terms that I remember hearing him say it. No, not hearing him say it, but reading it, and then hearing other people talk about it. If you can go on YouTube and watch people talk about Wyckoff's markup phase and markdown phase. And there was a guy on Baby Pips that did a lot of work with Wyckoff, but subscribed to it to a degree that I felt if he would just loosen up his hold on it, he'd be a far better trader. And he's still over there, with his threads or whatever. But I don't believe that that was the answer either. But it helped me see something I saw in price action, which were these ramp ups in price that were really just engineering selling opportunities. And once I submitted quietly in the quietness of my aunt's bedroom, which I was paying room and board to live in, I was secretly studying, much like I know my trolls are doing my stuff. They'll talk about me, okay, but I know they're watching my stuff, and it just hasn't sunk in yet. It took a long time for me to swallow the bitter pill of being wrong about what the general theory was of Wyckoff, because the guy was really ahead of his times. Now, I don't know personally if he was a good trader because I never cared to study him that much. I just know that it confirmed something I saw in price action. But I had already worked out the idea of the buy model on this side here, okay, or the buy side of a sell model. This would be a market maker sell model. This whole business here is not going to be a science from a Wyckoff standpoint. You're going to look at a lot of the things that Wyckoff teaches or suggests, and sometimes it's there and sometimes it's not. In a ICT market maker buy model and sell model, they're there every single time, and it's at a specific price level for a buy or a sell and re-entries. It's to a science. Wyckoff does not deliver that, in my opinion. I had to compensate for that, just like I had to compensate for Larry Williams' misunderstanding or lack of caring, I guess. I don't know if he just didn't care enough to do it. I'm sure he's not stupid. He could have figured it out if he wanted to. Because I think he's being facetious in a way. Maybe he does know how to do it and he's just never wanted to give it publicly. I don't know. Okay. But the point is, I have looked at opportunities in other teachers and I listen for them to say where they're weak at. And most of the time, you don't ever hear a guru, mentor, teacher, educator, whatever you want to call it. Okay. You never hear them admit where they're weak. And I think that's a disservice, not only to them, but it's a disservice to their students because it provides a wonderful opportunity for their students to go beyond them. And that's what I want. I want my students to be better than me because I have a vested interest in it. Because I know by the numbers, if I can get as many as you that are listening to my voice to learn what I teach, you will help me fix the thing that I need in my exit strategy. And then I'll be satisfied. Because right now I do the same stuff all the time. And the only thing that always leaves me dissatisfied is the exit strategy. And they're good exits. They're great exits. If you show with anybody else, they're like, man, what's wrong with that? It's not what I want because I have to work for the exit strategy. And if folks in a mentorship, you ask them point blank, they'll tell you this is the same thing I say to them too. And it's frustrating for me because I want to be able to say it's black and white. It's this or it's that. And I can't define it where it's like that. My entries are very definable. They repeat. They're just very generic things. But the exit strategy, folks know about central bank dealers range. They know about flout. They know about the Asian range. They know about Fibonacci. But there is not a science to it where it always repeats to the right level all the time. And that is one of the things that the trolls are right about when there is ambiguity in that. because I have to rely on my tape reading and experience to do it most of the time. Now, you can use what I've given you for the scalping, um, high probability scalping concepts series I just did, the 3 videos. Right now there's 4 videos. Some of you are not aware because you're waiting for the video to pop up on YouTube, but there's already a video there, but it's going to be unlisted because I want you in the forum. I want you engaging there because I don't let anybody comment to me on the forum. I'm sorry, not on the forum, but the YouTube videos. I disabled the comments because most of the time it's other websites or people spamming saying check out this binary system or whatever, and I'm not going to provide an opportunity for them to advertise. But you're certainly welcome to blast me respectfully, challenge my theory or whatever on the forum, okay, and explain why you feel like you do. But if you act ignorant or whatever, I'll ban you. But I have no problem having someone respectfully engage me and say, I don't believe this. Can you show me why this is like this? And maybe it might change my mind. But if you're going to come on my forum and act stupid and just be disruptive, if you see anybody doing that, just send me a tweet, and tell me, what their screen name is, because I'll go right in and I'll ban them. Right now, I don't have any moderators, but you only get one chance to act stupid, and I'll ban it. And the ISP is banned, not just your username. But I want you all to help me do this because I absolutely need it. Okay, I'm going nuts with it. For 25 years, I have beat my head against the wall trying to come up with a way where I can frame an exit strategy using what I know, where I'm satisfied with it. But you won't need to have this problem if you just simply use the criteria I gave you with the levels in the fib, because that'll satisfy enough. And most of you are dying just to have that. But there's other things that I do, and mentorship members know this, that we can get really close to the high of the day and the low of the day within the same range of 1 or 2 pips, if not the very high or low. They've seen examples of it. They've seen it. Some of them are doing it. Problem is, it's not always there. It's not always clear cut. It's going to be using this or it's going to be using that. And that's what I'm hoping that I can inspire some of you to be, to some degree, a nut about studying price action like I have for 20 years plus, and find these things and figure it out. Because I would love nothing more to have one of my students teach me an inadequacy I have in my own trading, because I have no problem and no shame and no ego too big where I can't say, you know what, I was so instrumental in their development that they ended up helping me and taught me something that I couldn't overcome on my own. And I think that is what's lacking in most teachers today, because it's all about ego and pride. And I do have an ego, don't get me wrong, but I'm realistic too. I know where my limitations are, and I know what could potentially fix it. I can't personally overcome it. It's like a thorn in my side. I can't fix it. I may never fix it, but my last attempt is to inspire you all to do like I did with Larry Williams. I figured it out, and people see it. And it's Power 3. That was the whole concept behind Power 3. Knowing when to buy below the opening on an up day, when to sell above the opening on a down day. And what price, not what range, not zone, not none of that stuff. There's a specific price level I aim for. And when it hits, I trade there. And then I reach for objectives, throughout the day. But those objectives can range between 3 to 5 at the beginning of the day. At midnight, there's 3 to 5 different price levels I know that probably form the high or low of the day. That's what I mean when I know what the daily high and low is. I know it right before midnight. So technically, it's in my time zone. I know what tomorrow's daily high and low is yesterday. It doesn't sound believable. It doesn't sound possible, but it is. And it's measurable. It's there. The problem I have is I can't make it where it is like I can describe it. So therefore, once you read it, you describe it, you can go and duplicate it. That's the part I'm having. Now, other people can read my stuff and follow my videos and my tutorials and my lessons and go right in and find the entry patterns and use the setups and be profitable. And it's great because they can see that part because I've made it binary. It's this, it's that, it's structured. The exit strategy, not so much. So you'll have to be satisfied with knowing a confluence of things agreeing on a particular level for targets when you go through my work. And you're going to have to give up sometimes. The daily range may go farther or it may fall short, but it still delivers a lot of potential there, much more than anything else that's out there in the market. And I know because I buy everything and I want to see if people are teaching my stuff. And for the most part, it's the same stuff. They don't teach you price, they teach you indicators and settings. And that's not how it's done. Price isn't working off of an indicator, it has no comprehension whatsoever of your stochastic settings. It's completely it's completely disconnected from you. Okay, it doesn't even acknowledge you. It can't see you. Okay, the market goes after large liquidity in the form of large trading firms, um, large funds. That's what the market works off of. But the problem is those same individuals and entities use a lot of the same crap that's in the books that we buy and believe in. And I've read over 2,600 trading books, and you wouldn't believe that there's that many. And I don't buy them anymore, but I have ingested okay, 2,600 plus trading books, and I can tell you the ones I've listed in this video are the only ones I think, except for trading for a living by Alexander Elder. Just that one, not his other one, not his other. I think it's Come Inside My Trading Room or something like that. I didn't care for that one either. And Market Wizards 1 and 2. I felt that they were inspirational, um, and that's it. I don't think there's really anything else. I think you should be writing the trading book that you are most inspired by your journal. And I think that if my children ever do get inspired to become a trader, I think they would agree that the things that I wrote in my journal are far more worthwhile reading than any other book out there, including the ones I've listed in this video. No disrespect to their author, but it's based on stuff that was real, and it's decades of it, day by day. Every single trading day, I do something in there. And if I don't take a trade and I don't trade, I don't just simply no trading today. I write in there the reasons why I didn't take the trade, period. I'm accountable to myself with that journal. And I spend good money on it. All my journals cost $50 to $75 each. I go to a nice bookstore and I pick up leather bound ones, and it's the same one. And I use the same style of them. I've been doing it for 20 plus years, and I treasure them because I wish I had, a father that would have did something like this, where I would be able to hold on to it and read them and know what he was thinking at the time and how he felt, because I pour everything into these things. They're real projects. Every day I look forward to journaling. I've done it when I was a teenager, when I used to practice lucid dreaming, and it probably sounds weird, I know, but I would keep a dream journal. Every day I would wake up and, write down. A lot of people don't even remember dreaming. I can tell you every night what my dream is for the last 30 plus years. And I've got books on that too. And some of the dreams are amazing. And some of them I woke up in the dream and had control of what I was doing. And it's lucid dreaming. It's neat, but it takes a lot of time to get there. But they're not all lucid dreams. So journaling to me is one of the best things you can do. Now you get these jerks that get online. Okay, they have no comprehension of what they're talking about. They only have is negativity to say because they want to be comedians. They'll say, "Well, journaling's stupid. Don't waste your time with that." These people are still working. I guarantee you, they're still working, and they will never leave their job. They're tweeting and they're doing things online from a state of disgust. Folks that are doing exceptionally well, they do journal because they make a reference of time periods when they're doing exceptionally well, and then they have periods of time when they're doing not so well. And when you're doing things as you should, and you do not do what you should in terms of your results, you need to go back into those points and get encouraged by the times when you went through it bad, but you're not sulking. You're not beating yourself up saying, this sucks. I don't do well as a trader. This is never going to turn around for me. In fact, what you're going to do is be objective about the fact that what you were doing wasn't working, but you're not losing sight of what you're supposed to do. And that will carry you through these periods of time when you're going to go into a losing streak. I've had periods where I've had 10 trades, sometimes 15 trades in a row where I'm wrong. Now, it's on the basis of scalping in the summertime. Okay, there's a lot of times where I'll take trades and I'll get burned, and I haven't had so many of them where it can be like I have 5 episodes of like that, but I've had it. It happened because I was trying to be active. I was taking multiple trades in the same day. I fixed that problem by sticking to only trading in the kill zones. That means I got at best 3 trades a day. If I use that up, I can't trade anymore. So I have a battery life on the time of the day, but I also have a threshold at which I can't trade beyond. I cannot take more than 3 trades per day. I don't care what's going on in the marketplace. Because when the markets were hot in the early 2000s, man, I was in there sometimes 30 times in one day. And that's a lot. 30 trades in one day is insane. Now, some of you guys that want to scalp like ultra in and out, you might think that's normal and it's like a normal day for you. That's not normal for me. And when I was done, I was exhausted. Sometimes I made a lot of money. Sometimes I went home with less than I started with. And on top of it, feeling broke because I was feeling like I was wasting my time. And in fact, I was. I was trying to do something that wasn't personally aligned with my personality. I didn't feel like I was getting where I needed to be. And then when I dialed back and said, I'm gonna focus on when's the best time to trade. When's the best opportunity for me to trade. And then once I define that, I'm only going to trade like that. So I started refining things, and how I did that was looked at my journal. When I do a trade, I write down the times that I took the trade, the actual time. And I also write down my time targets. Now, a lot of you think that just having a protective stop loss or a limit on a specific price level you're willing to pay. I have a time limit where the trade has to work within a specific time, and if it doesn't, I kill it. So it's important to have those reference points in your journal. Why you took the trade, how you feel physically. Are you upset? As much detail as you can. You don't have to write down what color underwear you're wearing or what you had for dinner. But you should have as much detail as you can about how you physically feel, if you're stressing about anything, or many times you're excited about something that's possibly going to happen, like your birthday's coming up. Okay, uh, you're getting ready to turn a significant price. Listen to me. You're getting ready to turn a significant age. Okay, and maybe it's 50. Like I'm looking at 50 in 5 years or less, and I'm thinking, what do I want to do at 50? Well, the day before I turn 50, I know I'm going to be feeling a certain kind of way. Okay. And I probably don't want to be trading that day because I'm preoccupied with feeling like I'm half a century old, and I don't think that's probably a good thing for me to be trading with, because one of two things are going to happen. Either I'm going to be inspired to do something to feel young and reckless, or I'm going to try to be old and stuffy and too organized and rigid. And either way, it's going to take me off of what I'm normally trying to do. So journaling is important, and that was one of the biggest keys to me developing what you see me able to do, because it kept me accountable to myself. My uncle, I was unable to have accountability with him because he wasn't disciplined enough to do his own trading, and he's very opinionated and negative. Everything was negative from him. This sucks, this doesn't work, I don't know why I'm wasting my time. So if you have friends or if you have people in your circle where you're trying to engage with and they have that same mindset, try to encourage them to change it. But if they don't, drop them, because they are going to be detrimental to your development. Okay, you're going to just be drained by them. And many times, like I did with my own uncle, this is a family member, it became so toxic that I said, well, I'm going to use him to my advantage, and just, he's retail and I'll be smart money. And I don't want to encourage that type of thing, but it was advantageous for me to do that. So while he wasn't a mentor for me, he was a significant catalyst for me to develop what I now see internally with watching price action. So if we know that referring to things in the past in a measurable way in any other industry or any kind of pursuit of intellect or higher learning, why should we be surprised that it wouldn't have that same effect in something like this? I mean, we're doing the hardest thing in the world We're trying to make money from an industry that is driven and ran and managed and controlled by banks, not your mortgage bank holder, not the mom and pop credit union down the street. Okay, the guy working in the teller that says that ICT doesn't know what he's talking about. Central banks. These people make the world go round. They're driving all that stuff. And you think you're going to come in here and with an RSI setting and a MACD, you're going to be able to turn the whole world upside down? No, you're not. You're not going to do that. You need to know what they do. And what they do is exactly what I'm teaching you. Organized. It's time-based. It's on a schedule. It's all manipulation. It's meant to upset current sentiment or deliver and engineer a opposite sentiment. And then the real move takes place. And you have to be flexible to allow that type of learning to occur. Otherwise, you'll fall victim to everyone else outside of our circle that says it's conspiracy theory, tinfoil hat, and it doesn't really work like that because they know 15 people that says that it doesn't. But those same 15 people aren't doing what you see me doing and what some of my students are doing. Look at the big names in this industry, okay? Whoever they are, study them. Go and research and see what they're doing. Then contrast that with what I'm telling you. The more I do in this business and study other people, the more I'm convinced they know even less than I thought they did from the beginning. Because they're subscribing to these theories that are outside the open, high, low, and close. That's the 4 indicators you need to know. The opening price, the high price, the low price, and the closing price. And they're top secret because they've been in your charts all this time, but nobody pays any attention to it. You're hiding it with indicators. It's almost like, it's lunacy. You got to really be careful. As soon as you start applying things to your charts, if it's not highlighting price, you're doing it wrong. And the only thing you see on my charts is a horizontal line denoting a specific price level, drawing your attention to that, or I'm putting a rectangle in there highlighting a specific range of where I think liquidity is going to be drawn to. That's it. And I don't even need that. Like, my charts are completely naked and unafraid. I don't want anything on my chart. I have just recently, in the last couple of years, gotten comfortable having things on my chart because I teach. And I have to have certain notations and annotations on my chart to make what I'm doing understandable. But it's not on my charts when I'm trading. So I've done a lot of talking. I'm going to escape. Hopefully this has been insightful to you guys. But until I talk to you next week, have yourself a very pleasant weekend. Be safe, be careful, enjoy your family, study. And until then, wish good luck and good trading.